What is going on, guys? It's your boy Mike. Now, in today's video, I want to talk about the top five catalysts that I'm actually waiting for when it comes on to SoFi. Now, I believe in this company for the next 5, 10 years, and I will continue holding this company, right? This is a phenomenal company. I think the CEO is doing a phenomenal job growing this company. And I want to talk about the top five catalysts, right? Because it's not just about rate cuts, right? It's not about that. Yes, it does help, right? But it's not all about that, right? So I want to dive deep into this, the top five catalysts that we have here. So, the big elephant in the room, yes, rate cuts does matter in some form of way. And that is one of the catalysts that I'm waiting for, right? We need the 10-year Treasury bond to come down, right? We need it to come down about like 3%, right? If it continues to trend up into the upside, it's going to be too expensive to take out loans, right? So the more it goes up, it's literally incentivizing consumers and businesses to not want to really take on that much risk, right? If you in a mid cap, small cap, consumers, whatever, right? In that area, not big companies, they usually get better treatments from other investors. But the majority of the market, right? You need these 10-year bonds to come down, right? You need it to come down. So, right now it's at 4.5%. If it does come down to maybe 4%, this is great, right? It's because more people are going to be taking out more mortgages, more loans, more personal loans, and that's great, right? So this is one catalyst that I'm waiting for at the moment. So let's talk about number two, right? What is the other one? So the other one is deposits, right? Deposits are growing extremely fast. We're talking about a 51% CAGR. Now, if in terms of deposits, you want SoFi to continue to accelerate deposits. Why? The more deposit that they have on their platform, I mean, that's telling you that consumers are actually trusting SoFi with their money, right? And the fact that that's happening at an alarming rate, actually a phenomenal rate, SoFi could actually take that money and give out loans, get a premium with the fees, and then once they collect that loan, they could actually sell that to investors at a premium, liquidate that loan, get it back in cash, and repeat the exact same thing. So this is great. You want deposits to grow, right? You want this to grow. So that's one catalyst that I like. The third catalyst is the actual loan quality, right? Because here's the thing: you can't, as a bank, you can't just give out loans to just anybody, right? Because that is the extreme liability, right? You want to loan out to people that have good credit scores, actually pay on time, and won't default. You know what I mean? So yeah, I mean, the loan quality is great. If you were to look at right now with the retail sales, I mean, it's trending up to the upside, right? People are spending money, right? So also means that, the economy looks pretty good right now, right? So that is one catalyst that I'm waiting for. I mean, we could see this trend crazy up, depending on what happens with oil. So we do have to watch out for that. But, currently, I mean, people are spending, right? So let's move on to the other one. So yeah, let's talk about number four, right? This is the products per member. So yeah, I mean, members are growing, right? So from Q1 2025, it's about, 10.9 million. Now first quarter, it's about 14 million. That's amazing. But here's the kicker, right? Not only members are growing, but the products are actually growing faster. Now, what is this telling us? Well, this is telling us that, each member is actually using more products, right? So the cross selling is already happening. The people that are already on the platform are actually utilizing more products. And this is great. This is what you want to see from a bank like SoFi, right? So, if these members are actually using more products, that's actually more revenue for SoFi. That's phenomenal, right? And that's what you want to see. This is a better representation of what's happening. As you can see, the members going up, then we have the products going up, and yeah, this is amazing. So this is another catalyst that you want to watch out for, right? I mean, yeah, if you start seeing members going down, and then the products are going down, that's not good. That's not good at all. So yeah, that's something to watch out for. Now let's move on to another one, right? We have profitable growth. Now, you want your company to be growing. We all want, the company to be growing. You cannot invest in a company that's just not growing, right? So like, yeah, I mean, clearly, as you can see, revenue, $1.1 billion. We have it growing 41% year over year. That is amazing. That, as a bank, that is phenomenal, right? And then we also have net income, right? Net income is positive, by the way, about $167 million. Can't beat that, right? I mean, of course, these other banks is doing a lot more than that, but I mean, so far, with their market cap right now, this is great. And then we have EBITDA. EBITDA is growing faster, which is $340 million, right? 62% year over year. And then the margins, and then, yeah. So this is what you want to see, right? You want to see your company growing. And this company is doing an amazing job, right? They are actually growing 30%. They're guiding 30% year over year. The CEO actually didn't even raise guidance, but you know how Anthony Noto is, right? He's not trying to throw everything on the court, Yeah, so there's no like, all right, he's trying to boost the stock or none of that. No, he's telling people, okay, hey, this is what we can do, and we are going to do this, right? So he's not overstepping, right? So that's great, right? You want your CEO to set proper expectations. Phenomenal, right? And then also, I do want to talk about another thing, right? This is the last catalyst, which I believe is great. The valuation, right? The valuation is amazing. I mean, you're getting it at 5 price to sales. What? Like what? That is crazy, right? Like that is cheap for the growth that this company does. I mean, that's a bargain. That's a bargain. Like, come on, right? And then, if you were to compare it with another fintech company, which I own also, Robinhood, right? Robinhood right now is traded at 14 price of sales. So, I mean, if you really look at it, it's not a bad bet, right? I mean, you're getting it a lot cheaper, right? When it was up here, between the 10 and 12, the price of sales was a bit high, and when it was at 12, I would say probably Morgan Chase was actually a better, like, it was more cheap, because it's more likely for that valuation to expand. But for SoFi, it's pretty high. At that time, if you were to look back on Chase's valuation, price of sales, it was at a decent multiple. So, at this point, like, I would have slowed down my DCA a bit, and I would have heavily went into on Chase, because I knew Chase evaluation is going to expand. So now that it's back to 5, Jesus Christ, I just keep buying, because it's like 5 price of sales. That's cheap according to its growth. Come on. So, like, yeah, and if you look at like Coinbase, which I'm not really familiar with this company, it's at 7. So, yeah, listen, the company is cheap. As much as Anthony Noto, he's buying as much shares as possible, and the market doesn't care. We clearly know that in the next 5-10 years, the market cap on this company is going to expand dramatically. There's just no way. You know what I mean? Like, with the growth that it's already doing. Come on. So I don't really care about the short report. I think Anthony Noto is going to press charges. Not too sure how that's going to go. But it doesn't matter, right? The company is growing, great. And I'm just going to keep on buying. And that's it. But yeah, that's it for today's video. Hope you guys enjoyed it, and peace out.